Hi everyone, welcome back to Mitchell Markets. Today we are going to be doing a deep fundamental analysis of stock UNH, United Healthcare, one of the largest healthcare companies in the world, and it is still down quite a bit going into 2026, and we're going to decide if this is a smart money buy opportunity or if this should be left alone and kept in the dark. We're going to be going over profitability, all earnings. We're going to be looking back at a 5-year time scale, looking at the macro headwinds and seeing how the cost of pharmaceuticals is going to help or hurt UNH going into 2026, and decide whether this is a good value buying opportunity or something that needs to be left alone. UnitedHealth, one of the biggest healthcare companies in the world, is down heavy going into 2026 and throughout 2025. So the big question is UNH a massive opportunity right now, or is something else wrong with the business and fundamentals? And what UNH actually is, it's not just a insurance company, it's two big business. United Healthcare, the insurance side, and Optum, which is the pharmaceutical benefits, clinics, and data for healthcare services. And together they touch almost every part of the healthcare system. Over the last 5 years, UNH has been a monster revenue climb from about 226 billion to over 337 billion in 2023. Net income almost doubled. EPS grew double digits almost every single year, and Optum became a massive growth engine. So if you zoom out, the company has been extremely consistent. Long-term fundamentals look extremely strong. And as you can see, this 5-year climb before dropping off. But here's the part most people don't understand, and that's why UNH is still down so much in 2025, even though the business looks amazing long term. And there's three big reasons. The 2024 cyber attack. UNH's Change Healthcare division got hit with a massive ransomware attack. It cost billions to fix, it disrupted hospitals, pharmacies, and claims, and created a ton of unexpected expenses. And on paper, 2024 profits collapse. Second reason, there was a Medicare Advantage payment cut. The government changed reimbursement rules, so margins on senior plans got tighter, and this pushed UNH's medical loss ratio up to the 80% range, which is higher than investors like. Then there was also regulatory heat. UNH is so big that regulators are watching everything. PBMs like Optimum RX, Medicare, certain billing, and prior authorizations. And sentiment in Washington has been very negative with Department of Justice probes and so on. But here's the part that everyone is missing. Almost all of UNH's 2024 problems were one-time events, and when you remove the cyber attack costs, UNH actually had record adjusted earnings. Adjusted income hit around 25 to 26 billion, and that was the highest ever. Revenue in 2024 hit $400 billion, still growing over 8%. Membership grew again. Optum continued growing double digits, so the underlying business didn't collapse, only the headline profit number did. Now let's look at 2025. UNH is guiding for 450 billion plus in billing revenue and $28 to $29 in earnings per share on the GAAP side, which is almost double the depressed EPS of 2024. They're expecting a full rebound in profitability, and Optum is set to add hundreds of new value care patients. So internally, the company believes 2024 was a temporary setback and that the growth is going to go right back to normal. And I always like to look at the competition like CVS, which has lower margins, lower growth, and Humana, which has a great Medicare business, but much smaller and hit by Medicare rate cuts. Relevance, solid insurer, but doesn't have Optum, the services side that gives UNH huge diversification. Across revenue, profit, and long-term growth, UNH is still number one. So now let's talk valuation and fundamentals. Right now in 2025, UNH trades around 15 to 18 times forward earnings, which is pretty average for the S&P 500, and the PEG ratio around 1.1 to 1.2, which is adjusted to fair valuation. In 2021, UNH traded at 25 to 27 times earnings. Today it's much cheaper. Cash flow still extremely strong, over 24 billion in operating cash flow even during the bad year. They pay a dividend, they buy back shares, and they reinvest heavily into the company. Optum alone, if it were its own company, would be one of the largest U.S. healthcare firms. From a pure fundamental standpoint, UNH is still growing, still dominant, and still throwing out massive cash. I'm not going to suggest that there are not risks. Medicare Advantage margins could tighten, regulation could put pressure on PBMs and billing practices, healthcare costs can spike year to year, and because UNH is gigantic, every political headline hits the stock. But these risks aren't new. UNH has dealt with them every single year for over a decade and still delivered double-digit growth. So is UNH a buy? And here's my honest take. UNH is definitely not a hype stock. It's not a momentum play, but at these levels, after the sell-off, after the one-time issues with earnings that are set to recover, and with the stock trading at the low end of its historical evaluation, I think UNH looks like a high-quality, long-term buy. Strong revenue growth, strong EPS rebound, a defensive business, and a much cheaper price than before. So if you want a stable compounder with real fundamentals, UNH is looking pretty attractive heading through 2025 and into 2026. And now that we got the fundamentals out of the way, we're going to take a quick peek and do a chart analysis and update. So as you can see, over the year we have created a couple gaps, and one of my major confluences for entering a trade is that there is a level that we want to reach, and UNH has that. UNH has a massive level we want to reach between 490 and 583. And do I think it's going to get there in the short term? No, I do not. But do I think it's going to get there over the next year or two? I do. And that is about 70 to 100% gains over the course of a year or two. And with UNH being at one of his best prices, especially in recent years, I do think it is a relatively safe long-term play, even with the current macro headwinds. I would be looking for the next year or two out. If you're doing leaps or if you're doing shares, just hold on and add to your portfolio. We are looking close here for a golden cross and a potential rebound to test this gap in the 489 range. If we look at the fib levels, we'll break down. We are riding right along this 226, and we have already tested the 382 but had failed to recover. I think if we test the 382 with the 200 moving average again, I think we can bounce through it to test the 0.5 and then continually progress into this gap fill here. So UNH is something that I will be keeping in my portfolio and getting shares, not going to be trading it as much with the macro headwinds, but through 2026 I will slowly and continuously add shares to my UNH position for a long-term rebound. If you guys like this analysis, make sure to subscribe, drop a comment, and ask some questions, as we have some more stocks to look at later this week, as well as some big earnings coming out on Nvidia this week that I will be going over. So thank you, and see you next time on Mitchell Market.